Assalamu alaikum everyone. This is another video regarding the taxation under the head of salary. So under the head of salary, we have different sections which we have discussed before, like the basic salary, medical allowance, rental accommodation, subsidies, subsidized facilities, and etc. So now we learn about the employee share scheme. It is one of the important head under the salary when you're working at any listed company. So how it works, let's suppose you're working at any listed company. Suppose you're an employee of an agro fertilizer. Okay, an agro fertilizer listed company whose share or stock has been listed at the Pakistan Stock Exchange, where you buy or sell stock exchange at the rate which is currently available on a trading board. So let's suppose the share of agro fertilizer is rupees 500 per share. Okay, and you are employee at agro fertilizer, and you're working as an assistant manager procurement, let's suppose. Okay, so your company is willing to issue shares to their employees upon some discounted rate. Okay, why they are willing to issue their own shares to the employees upon a discounted rate is a different story, which we will learn some other day, because there's a very long story. There are many reasons. So just here we need to know about the treatment of these shares under the employee share scheme. So let's suppose your company is interested in giving you shares at rupees 250. Okay. What is the market value? That is rupees 500 per share. But at which cost your company is willing to sell that shares? That is rupees 250 per share. Okay. Let me write here, that is rupees 250 per share, in order to avoid any misconception. Okay. Now, what will happen if okay, first of all, if there are 1000 employees in that company, and company is willing to sell only 200 employees, then company issued them grant, or you can say option. Okay, like company is when they intimate them that we are willing to sell you these shares, then that intimate or that request can be called as a grant or option in the language of taxation. So when 200 employees receive option, that they have a choice that whether they have to purchase that shares or not. So when if anyone is willing to exercise this option, let's suppose the value of exercise is the value of option. For example, the value of option is rupees 1000. Okay, you have to pay 1000. So let's suppose if any one of the employee is going to purchase, let's suppose 1000 shares. Okay, then what will be the treatment of taxation when you are going to purchase 1000 shares under the employee share scheme? First, you have to calculate the market value of shares, 1000 shares. And what is the market value? Market value is rupees 500 per share. So simply you need to multiply 1000 into 500, then you will get the value, that is rupees 5 lakh. Okay, okay, now we have to calculate. Okay, before calculation, let me write, you have to subtract these values. Okay, first value is the consideration which you have paid for the grant or option to acquire shares, that is rupees 1000. Okay, you have paid, value of option is rupees 1000. Okay, so simply you have to less 1000 rupees here. Now, how much money? The second one is consideration paid for the purchase of shares. Now that is you have purchased 1000 shares and how many cost? Rupees 250 per share, then it will be accumulated as 2,50,000 rupees. Now, the taxable salary will be 2,49,000. Okay. So this value will be taxable under the head of salary. How you will written? Let's suppose you have a basic salary. You have just like your, let's suppose basic salary rupees 90,000. Then you write your medical allowance. You write your medical allowance that is rupees 10,000 annually, and entertainment allowance is also 10,000. Then simply you will write here employee, that is employee share scheme, and just write down the value. How much? To like 49,000, and just add them. Then you will get the value of your taxable salary. So this is, it will be your taxable salary. Now, there is a twist in the employee share scheme. If if company is willing to sell these shares at a subsidized cost, but there is a restriction. If they restrict you, restriction of disposal for 1 year. Okay, you cannot sell your shares till 1 year, 12 month. Then the value of 2,49,000 will not taxable. Okay, it will not be exempted. It is actually not taxable, so you will not write tax employee share scheme here. Simply just that's it. But if there will be no restrictions, then the sum of money, sorry, then the profit which you will derive from the purchase, that is to like 49,000 will be taxable. Then you have to write here employee share scheme and just write to like 49,000 as well. Then your taxable salary will be to like 59,000. So this is all about the employee share scheme. When any company is willing to sell their shares to any to their employee at a subsidized cost, then the sum of then the profit which they derive from the purchase of the shares will be taxable in case when there will be no restriction of disposal, or you can say there will be no restriction on the transfer of the shares. But if there is any restriction that you cannot dispose of your share, you cannot transfer your share or sell your share, then then the profit which you will derive from the purchase of shares under the employee share scheme will not be taxable. Okay, it will be taxable after the 1 year. So this is all about the employee share scheme. Thank you so much.